Alright, so someone asked me to make a video talking about Copyfunds and what they are and what they do. So here's your main screen, the home screen, the one we're all used to. And down here there's trade markets, copy people and invest in Copyfunds. It's one of the sort of big three options for types of things you can trade. So if I click on that, it goes to this screen here. This screen here are next generation investment products. So the first thing you can see is that, they describe it as an investment product. Something I wanted to point out, alright, if I go to trade markets, normal stuff, right, these are the stocks, cryptos, ETFs, indices, commodities, normal things we trade. Let's say I go to one of the stocks and I go to, I'm not going to Raytheon because they're a bit evil, whatever, alright, go on then, Raytheon. Let's say I go to Raytheon, who make guided weapons, but I go to Raytheon and up here you can see this button, it's a trade button. So if I want to open a new trade, boom, I open the new trade, we've all seen this trading screen. So it says trade, remember? If I go to invest in Copyfunds, and I go to, let's say I go to the crypto fund here. Over here, the blue button doesn't say trade, it says invest, alright? And that says something about the sort of the thought behind what a crypto fund is, okay? So first, if you don't know what a fund is, when I started trading, when I was young and I kind of heard about trading, I always assumed people were buying single things. So you buy stocks in IBM, or you buy gold, or you buy oil, or you buy, nowadays Tesla or whatever. You buy a stock or a commodity or one of those things. What a fund does is, it's like saying, alright, I don't want to invest, let's say Tesla. Tesla and Microsoft and Nvidia, they're all tech stocks. They're all US tech stocks. They're in the technology market. It's part of the overall things you can trade. That's the technology part, alright? So they're all individual tech stocks. Now let's say I don't want to trade one stock. I just think the technology sector, the US technology sector, is going to go up in general, okay? So what I can do is I can invest in a fund. So a fund doesn't have one individual stock in it, it's like a container, okay? And into this container, a fund manager, now a fund manager can either be one person or most likely it's a group of people. And their job is to say, alright, here's the technology sector. We know that people want to, it can be any sector, but let's, for example, they say, here's the technology sector. We know that the technology sector is doing well and there's a lot of people who want to invest in it. So what we'll do is we'll pick a lot of different companies and assets related to technology and we'll put them into one container. So maybe they put in Microsoft, or maybe they put in Nvidia, or maybe even they go a little bit further. They're not, this isn't what's happening, but they can also say, new batteries are coming along and they're going to be mining lithium. They're going to need lithium, so let's put lithium stocks in. That's a bit broader. But what they do is they pick a bunch of stocks which are all to do with and focused on the technology sector, okay? And they'll put them into this container, and that container now becomes the fund, okay? So if you buy the fund, you don't buy an individual stock, you buy one thing which has, it could have 50, it could have 100, it could have 20 different assets in it, but you buy the whole thing. And what you're doing there is you're not saying, I bet that one individual stock will go up, because you don't know which ones will go up, but you think the whole sector, it's going to go well. So what you're saying is that on average, you think the whole thing is going to go up. Technology is going to do well. I don't know which specific company, but it's going to do well. I trust this guy, or this woman, or whoever, the fund manager, to have picked good ones, the right ones, the ones which are most likely to increase in value. Put them into this container. That container is now the fund. So the reason they say invest rather than trade, okay, quite a difference. When you trade, I mean, I've heard someone explain it like this. There may be other ways and people may have other ideas on this, but he mentioned that trading, if you invest in something and you plan the life of that trade from when you open it to when you close it to be under 3 months, you're trading. So sometime you open it now, sometime within the next 3 months you're going to close that, you're going to get out of that position, maybe buy another one, you're going to in and out of positions trading. When it's sort of over 3 months, other people have different time frames. It's just an example. When it's over 3 months, a longer time frame, you're no longer trading. You're no longer sort of actively pursuing and buying it and checking it goes up and looking at the fundamentals and blah, blah, blah. You're now investing because it's more passive. The idea is that to invest is sort of you have money, you put it in and you leave it for a longer time frame. That's what they're looking at with these funds. So On eToro, over here, if I go to trade markets, we have cryptos, ETFs, stocks, blah, blah. ETFs. An ETF is an exchange traded fund, separate thing from a copy fund, but I want to explain something. So an electronically traded fund, which I can click on here and we can look at them. These are funds, so a fund manager, a group of fund managers have put these together, and these are so popular that they're actually, these funds are traded on major stock exchanges. That's why they're called exchange traded funds. So you can go to the NASDAQ or the London Stock Exchange or Paris, and you'll find ETFs. And it's a way that everyone can get into investing in funds. You know, other times you have to go to like a private institution and you have to go to a fund manager and sort of buy into their fund. These ones are available to everyone. People have so much faith in these fund managers that they're literally listed on the stock exchanges. So everyone can come in and they invest in these exchange traded funds. So when we go to copy funds, a copy fund is the same thing. It's a fund. It's a collection of different assets all in one container, and you buy the whole container, not the individual things inside. But the copy funds are created by Etoro. They're managed by Etoro. Etoro are the fund managers of these. So if we look at the page and we look at the types of funds they have, you can make a fund with any type of asset. It doesn't have to be stocks, it doesn't have to be commodities. You can make them about anything. So let's say these ones here, top trader copy funds. So what these ones have done is these are funds full of people you can copy. Now normally when I go to copy someone, I find someone I like Jay, I think, wow, Jay's really good, I'm going to copy him. I like his statistics, I see what he's trading, I'm going to copy him with this amount of money. What they've done here is they've made funds out of groups, okay? Let's go to the second one here, Gainers Quarterly Gainers it's called, okay? So here it says the copy fund is built on sustainable trading behavior, which means selecting up to 50 solid traders and allocating the weights evenly among them. The algorithm analyzes the traders to pinpoint the ones who are most likely to generate an alpha profit in the next quarter. If any of the investors within the copy fund demonstrates a wide fluctuation, they move outside of what they're expecting, outside the risk scores parameters, he will be removed from the copy fund portfolio at Etoro's discretion and replaced with another investor at the next rebalancing event. So what does that mean, a rebalancing event? That sounds a bit scary. So because all of these funds that Etoro manages and puts here under the copy funds, they have certain things in them. So let's have a look at this one here, asset allocation. So these are the names of people. In case you don't know, these are the names of different traders who are in this fund. They've got a lot of popular investors. Instead of copying one, they've got 50 of them, put them into one container, and you invest in that container, which means you think on average those 50 traders are going to go up in value. Yeah. So PicoSave has 5.59%, Forex Pirate 5.59%, James Lewis 5.58%, blah blah blah, and other is 72%. So 72% is made up of the other 45 traders, okay, because there's 5 listed there, it says it has 50. So what they're going to do, because Etoro is managing it, they're looking at this, and they're saying that we've set, you know, risk scores and parameters. As long as these 50 guys stay in it, we're good. If anyone moves out of it, periodically they're going to look at this and they might change it. They might get rid of PicoSave. Sorry, PicoSave, I'm not singling you out, but it's an example. Or they might get rid of Auenwald or whatever, and they might put another one in. So they're managing it actively, trying to make sure that this is safe. Okay. Let's go back to another one. Let's go to the copy funds. So these ones are all to do with people. They've grouped popular investors in, made a fund out of it, and you invest in that fund. Here we have ones which are about the market. Crypto fund. So again, normally you buy one cryptocurrency. You might buy Bitcoin, you might buy Ethereum, you might buy whatever, Litecoin. In the crypto fund, again, as cryptocurrencies become increasingly popular, a growing number of traders and investors consider them to be viable investment options. Whatever. What they've done here's the asset allocation. Again, all of them, they've only got 6 available for trading so far on Etoro. But look, Bitcoin makes up 60.59%, Ethereum 20.92%, Ripple 6.47%, Litecoin 4.05%, Dash 3.99%, Ethereum Classic 3.99%. So what they're trying to do is spread your bets. So when you look at this, why do they do that? Why invest in a copy fund? Why invest in a fund rather than a single asset? All right, so single assets, when you invest in one, normally, let's say for instance you take anything, a single asset. It may go up a lot, it may go down a lot, okay? One of the one of the things you're always trying to look at when you're trading is called risk management. So obviously, if something's in profit, we want to let the profit go up, but we want to save our money, safeguard our own wealth. It's one of the prime things about investing is, how do I make money? Everyone looks at making money, yay, just that's great. Everyone wants to make money. But how do I make sure if it does go against me, I don't lose a lot of money? It's called risk management. And one of the main ways of ensuring that your risk management is good is the process of diversification. So diversification means you don't put all your eggs in one basket. So if you invest in one particular stock, it can go up a lot, it can go down a lot, okay? It means you've got quite a lot of risk, you're exposed. If 100% of your portfolio, 100% of your money is in one stock, Tesla, you may think Tesla's the best company in the world. You may love Elon Musk, you may say, oh, that's it, Model S, or whatever's coming out next. It's a brilliant vehicle, I'm going to invest everything in Tesla. You're still very, very exposed. It means if something bad happens to the company or Elon or whatever, you've got a lot of money at risk. You could make a lot of money, but you could easily lose a lot of your money. People are always trying to make it so that they can gain, but they're limiting their risk, their downside. So diversification is the process of not putting all your eggs in one basket. You don't just put 100% in everything, okay? And it's the same with this. They pick a sector. So let's say with this one, crypto fund, they've picked cryptos, okay, as the sector they want to invest in. But they don't just say, right, 100% in Bitcoin, let's go, because Bitcoin might do really well, it might crash, and then they lose everything. So they try and spread their bets. Here they've taken all of the ones that they can trade. In the last example, we saw that it was based on 50 different stocks or 50 different assets. What they're saying is that we won't invest in one, we'll invest in all of them, because overall we think on this one, cryptos are going to go up in value. Okay, Bitcoin might go down, but the other ones will go up and balance it out. Or one of the other ones may go down, and the other ones will go up. You're betting on the overall thing. The diversification here, and the reason people use a fund is to spread out their risk. Okay, so they're betting on the general direction rather than one individual thing. Now, what does this mean? When you bet on one individual thing, you can often make more money by doing that. For instance, stocks are very volatile. Volatile means that the price fluctuates. It may go up a lot and it may go down a lot, more than other assets you can buy. Stocks are very volatile. So if you buy one, that's great, can go up, can go down. They're really trying to guard against the downside constantly, okay? So, all right, so if I go back to invest in Copyfunds here, here we've got the ones with the people. Here we've got the ones, with market Copyfunds. Here, look, this one focuses on the gaming industry. As a sector, it's saying, I think the gaming industry is strong, it's going to do well. If we look inside, we've got companies like Nvidia, who make obviously hardware, Activision, Blizzard, who make software games, Sony, Nintendo, Electronic Arts, again, they make games. So some are hardware, some are software, but it's all gaming industry. It's betting that the gaming industry overall will go up, okay? Here, performance, you can see everything. You can see the same things. You can see the performance of it over the last 3 years. The crypto funds, copy funds are new. So if you see the ones with the asterisks here, that's because it wasn't actually available. This only became available when the asterisks stopped. So here, July of 2016, this went online. So this is real, actual trading data. This is just what would have happened if it was active. So it shows you some history because these things are new. So 27% in 2015, 27% 2016, 44% so far in 2017. So that's the other point. When volatility means you can make a lot of money, you can lose a lot of money. When you invest in one, that's what can happen. With the copy funds, what they're saying is, all right, the diversification helps you with your risk. Okay, it's going to make it less risky. It's going to make it a safer bet. The problem with that, or the other side of that, is that don't expect to make as much off that volatility, okay? So your profit may be less. If you buy everything into Tesla, Tesla's going to do fantastically. Let's say it goes up. You can make 100%, 150, 200%. Yay, in a year, huge. But inversely, if it goes down, you can lose that much money as well. So with funds, because they've diversified, and because Etoro is actively managing these, rebalancing them, saying, no, we'll take that one out, we'll put that asset into the container, it helps with your risk, but it means you're not going to make as much in terms of profit. So What the product's really designed for, the funds, I keep calling them crypto funds, but the copy funds, what they're really designed for is people who want to, instead of trading, they want to invest, so it's more passive. They don't have to look at it as much. Now, I think the same thing's true of copying people. That's why I like copying people in general, you know? So I don't really invest in the copy funds because I see the same thing from copying people. If I look at their statistics, I see the guy's safe or the girl's safe and they're making good profits, I'm good. I see the historical data and I go forwards. But they made the copy funds specifically for people who want to invest. The minimum you can invest in these is 5,000. It's a lot of money. So they're looking at people who want to invest a minimum of 5,000, possibly a lot more than 5,000, and they want to leave it over time. And those people will trade off. They'll say, all right, we will have less risk. You're managing this. It's very diversified. So my risks should be much lower. I know that that also means my profits may be lower, you see? So if they get a 15, 20% return in a year, they're happy because their risk is also mitigated. It's much lower. That's what they're looking for. The copy funds are really aimed at people who want to invest a large amount of money and who are looking for the least risky thing they can find, yeah? And who don't mind if the profits are smaller than if they invested in individual stocks or in copying people. So, I mean, that's who they're for. That's who they're aimed at. So if I go back to copy funds, these ones deal with the people. These ones deal with markets. So we've got crypto fund, gaming industry, big tech. Again, if I go to this, Apple 19%, Google 16%, Microsoft 14%, Facebook 12%, Amazon 11%. So we've got some of the biggest companies there, some of the big tech companies, and other is 26.63%. So it's 100% stocks. There we are. There we are. And I can drill down and see a little bit more information about them. If I go to the chart, all it shows is this is based on if you copied with $10,000, you know. In the past, it would now be $12,000. And you can just see the line is steadily going upwards. And that's, you know, past results aren't always indicative of future earnings. I mean, that's something they keep saying. You can't really tell what the future is going to be. Just because the past is going up, it doesn't necessarily mean it's always going to be going up. People are worried about tech at the moment. But it does give you an idea that this has been working over time. And on the feed, you know, here, you can, you know, see a little bit about it, but really the stats should tell you most about it. There we go. So you've got the performance, the risk score. Really, this is the important bit. This is what people are looking for with funds. People are looking for a managed fund. Etoro is the fund manager on this, where it's watched. If one of the assets is not performing well, they'll change that for another one, take one out of the container, put another one in, keep the investors safe. It's only got 285 investors, plus 7 over the last day. And you can see a little bit more information about that there. So there's a wide variety. Crypto, copy fund, big tech, the big banks. Let's say you don't want to buy an individual bank, but you think banking overall is going to do well. They've got the big banks. This one is indices. So the stock markets, various stock markets, say the 100 leading shares on NASDAQ, or you can find out about indexes. But this one is a fund made up of different indexes. This one is ETFs. So an ETF in itself is a fund. It's an exchange-traded fund. What they've done here, Etoro, is they've got a bunch of funds, a bunch of ETFs, and put them into a fund. So now you can, so you can even have a fund full of ETFs. If you go along here, food and drink. So, it's a particular sector. So here, what have we got in this one? We've got McDonald's, Pepsi, do you know what I mean? Lots of Coca-Cola. So there's funds which, anything where you think, I think this sector's going to do well, you might be able to find a fund about it. Have a look through and see what funds there are. So that's this one, partner copy funds. So this one, for instance, here, there's a guy called Warren Buffett. I don't know if you've heard of Warren Buffett. Some people think he's an absolute genius, one of the richest men in the world, one of the most, successful investors and traders. Some people think he's a bit of an evil tyrant. It's up to you, whatever. This fund aims to mimic and copy the way he invests. So they've found out the way he's investing, and they've put all those things that he's really investing in into a fund, and now you can copy that. You can buy into this fund. So it's really it's quite a clever thing, really. That's what copy funds are about. Again, if I press invest, one of the things is, the amount is $5,000. So it's quite a rich thing. another thing you'll notice is that there's no leverage here, because when you use leverage, you start to incur overnight fees and weekend fees. And if you have lots of leverage on a long-term trade, those weekend fees and those overnight fees are going to stack up, and they're going to take quite a lot of your profits, or they can do. So generally people won't use leverage on long-term trades. So on the Copyfunds, which are meant to be longer-term investments, there's no leverage on them. Also here you can see that there's a little a stop loss. So there's a stop investing if the fund value drops below, and you can edit this to whatever you want. So there is like a stop loss on your Copyfund as well. Obviously when you buy this, it says deposit now because I'd need to put in $4,953 to do this. But once you open that investment, and once it's there, it will appear like all the other ones in your portfolio. So you can just go to your portfolio and find it, and you can track what's happening with your investment. I only found out recently that they've actually increased the minimum trade size. So in the past, when I saw 5,000, that's a hang of a lot of money to me, you know. But maybe to the newer people, because you're familiar with much larger trade sizes, I'm not sure if it is for you. If you want to find out more about that, the trade sizes, by the way, you can go here, go to help, and you can just type in here minimum trade size. There we go. And here you can get some information about that. Obviously for me, my minimum amounts, I can invest $25 in currencies and commodities, $50 in stocks, $200 in indices and ETFs. So when I saw 5,000 for a Copyfund, I thought, wow, that's a lot of money. After the April 2nd, 2017, they changed that. But certainly to me, the Copyfunds were quite expensive. So that's really what they're about. They're aimed at people who want a more passive way. Instead of trading, it's more investing. More, here's a lot of my money. I want something which is as low a risk as possible, but which makes profits. I don't mind if those profits are a bit less. And it's also, I expect to leave it there for quite a while. It's not something where it's short term, like I'm just going to go into it and out of it in 3 weeks or 2 months or whatever. The Copyfunds, I think they're designed for, you know, over 3 months, over 6 months, over years. Do you know what I mean? So just leave it there and let it safely gather money, gather profits. So that's it. They're constantly managing it and looking for the ones which are most likely to make you profit and rebalancing it. That's a little bit about Copyfunds. Good luck with them.